Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In Part 2, we'll go deeper into the features of Betterment and Wealthfront, comparing them to help you make a smart investment choice. Top robo-advisors in the market. Not all robo-advisors are the same. Some focus on retirement planning, while others excel at tax strategies or low-cost investing. Below, we'll compare two of the biggest players, Betterment and Wealthfront, to help you decide which might fit your goals. Betterment. Features and strengths. Betterment is one of the most user-friendly robo-advisors. It's perfect if you want a clear, goal-based approach. Here's why it stands out. Goal-focused investing. Set up targets like retirement, buying a home, or building an emergency fund. Betterment adjusts your portfolio to match each goal's timeline and risk level. Layered advice. Answer quick questions, and the platform builds a strategy. It also offers human advisor access for an extra fee if you want deeper help. Tax-smart tools. Automatic tax loss harvesting, even on cheaper plans, and tax-coordinated portfolios to minimize IRS bills. Betterment keeps things simple without skimping on strategy. You won't get lost in complex settings, just a straightforward way to invest smarter. Wealthfront, unique selling points. Wealthfront goes beyond basic portfolio management with features that appeal to hands-off investors who still want advanced perks. Key advantages. Path Financial Planning, free interactive tool that forecasts your financial future. Plug in goals, and it shows if you're on track, no fees required. High-yield cash accounts. Earn competitive interest rates on uninvested cash, making it easy to keep emergency funds liquid but growing. Direct indexing for bigger accounts. Own individual stocks instead of ETFs to customize tax strategies further. Available for 100K plus portfolios. Wealthfront balances automation with powerful planning tools. If you like data-driven insights but don't want to manage them yourself, this platform delivers. Both platforms reduce the hassle of investing, but their specialties cater to different needs. Betterment simplifies goal setting, while Wealthfront adds depth with forecasting and cash management. Who should use robo-advisors? Robo-advisors aren't just a fad, they're a practical solution for real investors who want simplicity without sacrificing smart strategies. While they work well for many people, some groups get the most value from these automated platforms. Beginners and passive investors. If you're new to investing or simply don't want to fuss over stock picks, robo-advisors remove the guesswork. They handle everything from asset allocation to rebalancing, so you can focus on your life instead of market trends. Here's why they're a perfect fit. No experience needed. Forget studying charts or reading earnings reports. Answer a few questions about your goals, and the algorithm builds a portfolio for you. Low maintenance. Once your account is set up, the platform does the work. No stress over when to buy or sell. Emotion-free investing. Human investors often panic during market swings. Robo-advisors stick to the plan, keeping your strategy disciplined. For those who prefer a set-it-and-forget-it approach, robo-advisors take the pressure off while still optimizing returns. Investors with limited capital. Some traditional advisors require hefty minimums, often $50,000 or more. Robo-advisors break down that barrier, making investing possible even if you're starting small. Key advantages for budget-conscious investors. Low minimum deposits. Many platforms let you begin with just $100 or even $0 for basic accounts. Cost-efficient. With fees as low as 0.25%, you keep more of your money growing instead of losing it to high management costs. Fractional shares. Even if you can't afford a full share of a stock or ETF, robo-advisors let you invest small amounts across diversified assets. Whether you're saving spare cash from each paycheck or building an emergency fund first, robo-advisors give you a way to start early without waiting for a big lump sum. For these groups, automation isn't just convenient, it's a smarter way to grow wealth on your own terms. Potential drawbacks of robo-advisors. Robo-advisors make investing simple, but they aren't perfect for everyone. While they excel at automated, low-cost portfolio management, certain limitations might make you think twice before going all in. Let's look at where these platforms fall short. Limited customization options. Most robo-advisors offer pre-built portfolios based on your risk tolerance, stocks, bonds, ETFs, but that's often where the personalization ends. If you want to fine-tune beyond their templates, you might hit a wall. For example, no individual stock picking. You can't exclude certain companies or overweight favorites unless the platform allows direct indexing, rare for smaller accounts. Fixed asset classes. Want to add real estate or commodities? Unless the robo-advisor offers those options, some do, many don't, you're stuck with their predefined mix. Limited control over rebalancing. The algorithm handles adjustments automatically. If you disagree with its timing or strategy, tough luck. This works well for hands-off investors, but if you crave deeper control, the lack of flexibility can feel stifling. Not ideal for complex financial needs. Robo-advisors handle basic investing well, but life isn't always basic. When your financial situation gets complicated, their algorithms might not keep up. Here's where they struggle. Estate planning. They won't help you set up trusts, draft a will, or navigate inheritance tax strategies. Advanced tax scenarios. While tax loss harvesting is useful, it won't substitute for a CPA if you have multiple income streams, business holdings, or international tax concerns. Niche goals. Saving for a child's special needs trust or optimizing a windfall. You'll need a human advisor's nuanced approach. Think of robo-advisors like a GPS. Great for straightforward routes, but if you hit construction or back roads, you'll want a real navigator. If your finances involve layers beyond set it and forget it, these platforms might leave gaps in your plan. Robo-advisors like Betterment and Wealthfront offer a straightforward way to invest with low fees, smart automation, and minimal effort. They're ideal for beginners, passive investors, and those starting with smaller amounts, but they're not for everyone. If you need complex financial planning or want full control over every investment, a human advisor might suit you better. Before choosing a platform, think about your goals and how much customization you need. The right tool depends on what you're trying to build, set it and forget it growth, or hands-on strategy. Either way, robo-advisors make investing easier than ever. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.